Okay. Yeah, I'm not going to put the webcam on. Do want to make sure that the quality is good enough. All right, Vex, excellent. Good job. Thanks, everybody. Well, with that said, I might as well just begin everything here. It's been a couple of months since I've had the pleasure of getting to mix with you guys on FX Street. Firstly, FX Street, thanks for having me. As you know, I'm Sam Evans, one of the lead instructors with Online Trading Academy, here to represent obviously the company and myself as well, show you a little bit of what we do. Normally, sometimes I do a lesson day. And sometimes I like to do an outlook. I thought we'd just look at some of the majors, get through as much as we can in the next 40 minutes or so. I'm going to be utilizing the Online Trading Academy course strategy for these purposes, going through obviously the way we like to teach our students how to do this, the way I like to look at the market myself as well. Many of you, I can see some familiar names in the room right now. So you'll be familiar with what I do, and we'll look for some key levels. It's Thanksgiving tomorrow, so anyone in the States, I wish you a happy Thanksgiving. It could be quiet, the markets, over the next couple of days, what with Thanksgiving, and also going straight into the weekend as well. So some of the levels I'm going to be really taking a look at on here as well are going to be mainly looking for kind of swing trades. Okay, so I'm not really going to be going down the day trading route, really just kind of focusing on the swing trading side of things. So without further ado, let's just go over to TradeStation to do some analysis on here, and I'm going to spend my time on these particular windows. Everybody seeing the TradeStation charts without any problems, I hope. I hope that's all coming through quite clear. I've got a daily chart up on the left, and I have a weekly chart on the right-hand side of the dollar index. So I'm going to kind of start with the dollar just to give you a little bit of a feel. In previous webinars I've done with you guys, I've worked with and I've kind of explored some things on the US dollar before. We're in a real key area right now. Actually, earlier this year, right at the start of 2015, I did an interview on here with Dale Pinkett, and we were actually looking at this weekly and monthly chart. I'm going to go over to a monthly chart right now of the dollar, right when we were here. And I was expecting a sell-off at that particular point, noticing the level of supply to the left-hand side. Now, when it comes to the terms of what I qualify as a good quality level of supply, this isn't to me the greatest level to the left-hand side. The level I'm in question that I'm talking about is this level right here. We've had a bit of a sell-off from this particular area, but it wouldn't be in my book, definitely in my colleagues like Sam's side, and the way we like to look at our supply and demand levels, where the institutions are making their mark. For me, it's not the greatest level, this level to the left-hand side from back in 2003, but it did put a dent in the market. It did put some selling pressure on the dollar, and the reason I highlighted it back then was because of it being around this big round number of 100. What's interesting to me is above these higher price levels of 102.25, we do have a pretty easy run up to the next level of around 106.50. And again, while there could be some stopping power then, I'm going to be watching very carefully over the next 6 months or so, even like next quarter, these key levels of supply on the dollar. I don't think they're the most quality levels, like I said. I think, the dollar itself is still heavily undervalued if you look at where we have been in the past. My eyes right now are looking at this from the point of view of, are we going to double top at this area? Because the thing that's made this market really interesting for me personally is there's very, very little to stop us if we break these lows that we put in around 6 months ago. And I'll give you some specific numbers on that. Is $92, 92.62. We break these key lows here. Really, there's not a whole lot to stop us testing. I would say around 89.15, and then if we can break through that down to around the 81 area. So that would be the classic kind of double top that we'd be looking for. But we can't deny the strength that's in the market. What I'm not seeing is any quality demand to support this. So maybe this area where we are right now is the demand zone that was going to push us higher. Okay, but again, what I'm very cautious of, and in my own trading, I'm not aggressively buying the dollar right now. This for me is not the time to buy because of the supply level I've got to the left-hand side. And this supply level, if you just want some numbers on that, The numbers I'm looking at on here are 99.57 to 102.08. And above, the 106.36 to 109.21 is going to be my next area in question. The thing that just unnerves me a little bit, like I say, about this dollar is the lack of good quality demand levels below. Like what I want to see is some real kind of nice stair stepping, some new levels of demand forming as we grind our way higher, but we're not seeing it. But let's not deny the uptrend is still in place. What I would like to just focus on is some very low risk shorting opportunities below the price of 102.08. And then if we do break above here, we would expect a further push. Now, the reason I'm looking at the dollar is because that's going to have an impact on the euro. It's going to have an impact on the pound. It's going to have an impact on the Canadian dollar and the Aussie. So I think getting a good feel of where the dollar index is right now is key. And what it does is it gives us a good idea of obviously, what we should be looking for on some of the other currency pairs too. So a little kind of thing that we'd want to keep in mind and we want to keep our eye on when we're doing this. I think a better look's going to be kind of just to see, do we have anything backing us up if we break higher? And one area I'd like to kind of mark off for you guys, this is if we do break higher. And I think a key level to watch out for, but it would be a good sign of potential strength on the dollar, is this area around here, which I'm just, I'm just going to mark off here, just move the wrong lines there. It's around the 102s, that area that I was looking for, 102.25. There you go, perfect. 97.20 to 96.40. Some serious buying stepped in at this particular area here. So if we can push our way a little bit higher and then we do get another sell-off, I really want to see if this area here holds. This could be, for all we know, a further area of chop over the next few months or so on here. But again, between where we are now and this level at 97.20, I could expect some movement. Even if we push a little bit higher, I'd love to see the market pull back to this area to try and re-engage and see if we can have another stab at those highs. So that's a key area to look for. And for me, one of the more quality areas of demand that I'm seeing on the price charts right now. So that does give us a bit of space for a sell-off on here. Okay, but again, this is a very wide area that we're looking at. And again, when I see these very wide areas of supply or vice versa, very wide areas of demand, I expect that the prices could go a little bit higher or a little bit deeper, depending on obviously the zone itself. So I would say, right now, going to this month, going to Thanksgiving, going into December, sometimes the Christmas holidays can be quieter. Just aware of where we at. Any upside pushes that we get in the dollar, there's going to be a lot of pressure on there. And again, I don't really see, I'm not comfortable getting too aggressively long on this. I would want to still buy this thing a little bit lower with an open mind to saying, hey, you know what, if we do sell off and that 97.20 area doesn't hold, expect further downward pressure. And then, there is going to be pressure on this dollar also at this demand zone a little bit lower on here as well. Let me just do a new line on here around this 95 area too. So these two key areas here. But again, to see it's, the first thing is if we can put a new high in, a pull back to 97.20, I'd expect some more upside on here. But if we fail to really take this out with any real force whatsoever, a bounce off 97.20 would be expected and then maybe a drift down to the 94.39. I would say if we just carry on rocketing higher on here, then obviously these levels are going to get my attention even more. But be aware that right now, I think we're in a place where, again, profit taking could come into play on here. I think, there's not a ton of fundamental information out there. And I'm not a big fundamental trader, as many of you would know. But I'm not a big fundamental guy, and I don't feel there's a ton of information out there that's really influencing price right now. Maybe some good time for some institutional profit taking at this area on here. So again, I'll be looking for those longer term trades between these key areas here at 99.57 down to the 97.20 and the 95.43 as well. So at the moment, I'm not finding the dollar as useful as I'd like to see it. Again, but what we are going to see when we slide over to the euro dollar right now is with the euro dollar, we're back in a place where we've just sold off again nicely today. That's supporting this upward momentum, but also what's going to make this challenging with the supply being on those big monthly charts on the dollar, we're also going to see some major demand levels on the euro as well. So let's take a look at that euro. Again, I don't trade the dollar index, by the way, guys. I'm using it as a guide. So if we look at some of these major pairs on here now, we're going to look and see, okay, if we were going to take some trades on here, what would be the ones that we're looking for? Okay. So you can see we've had some levels, and just showing you the euro dollar, how we've been on this particular market. We have had some bounces off some areas, but some good quality demand zones. One of the things is we've had areas where we've had some bounces and reactions, like this previous area here. And also we got a little reaction off this area here, and we got a little bit of buying. So between all these round numbers, we seem to be getting it. But you see how this market is still grinding its way lower, still consistently grinding its way lower, irrespective of obviously the big levels of demand and where we are. So again, we are seeing that weakness. But again, what this entices me to do is to say to myself, all right, then based on this, okay, we are very late in the trend. What do we want to see? What do we want to see to really feel that this market's got even further to push down? And again, looking at these big weekly charts on here, think about, double tops and double bottoms. All right, you only ever know it's a double top or a double bottom when it's actually formed, right? But that doesn't really do much for you. You had a great double bottom back here, right? Great double bottom back in this area here, okay? But not a whole lot of use to us until the actual thing actually happened, right? You only know it's a double bottom. So I think that what you've got to do is expect that when prices come back to these areas here, sometimes the lowest risk trades that we're going to get are going to be when we kind of buy at those belows, buy at those deep lows with a nice tight stop and see if that thing does produce a double top or a double bottom. That's one of my favorite tactics, but I only really want to do this on these bigger charts on here. So again, I'm open to that right now on the dollar, on the euro. And, I remember a lot of people back when we were at 105, talking about this thing going to parity or lower at 1. And obviously, that's still a target. And you can see that is a massive institutional level here, where, definitely I think everybody's eyes are on that particular area. And there's not a whole lot to stop it below these weekly lows to get for us to get there. Likewise, on that dollar index in that major supply area. Yeah, on that major supply area we saw on the dollar index. There's not a whole lot to stop it going a little bit lower, but now's not really the time where we want to be aggressively selling, because we're selling after a drop in price, and that's a massive mistake for us to make. This area here is 99.28, 95.98, because I'd be looking at this parity area, but I'd like to be getting that a little bit lower MRC, so just a little bit kind of lower is that key area where I'd be looking for. So what's going to be our tactics on this? Well, I think what we've got to do really is be aware of this major monthly area. I'm going to go to a weekly chart. I'll leave those numbers on the line for you too, okay? So you can see them just a little bit lower. And I think, looking at my charts, a key area that's just kind of got me interested, and this is an area specifically if we do start to break lower, and it lines up quite nicely with the dollar as well. There's a nice little area right here, and it kind of coincides quite nicely with that dollar index area too. And it's in this region here, and I love these round number plays in the Forex markets, 109.94 to 111.02. So this round number, the 1.1 area. Some sellers really stepped in there. Some really good selling pressure stepped in there. This would be an ideal short, I feel, for a long-term area. And we can go down to smaller time frames to do it if we want to, but I'm more than happy for a position trade to give this a wider area. But we could tighten that up, and we'll take a look at what it looks like on the daily charts. But if we do manage to break through these previous lows that we've had, if we can cleanly get through this 105 area, the two areas would be one area where I'd be loving a retracement for a pullback. And because one of the things that people forget is, these markets do need to make these pullbacks on here as well. I would say a pullback is definitely on the cards. And what you've got to say on here, I'd like it even more, MRC, if we break these lows. But here's another thing as well. This is a little extra I'm going to give you. Think of it like a game of chess, right? This also a little bit lower is going to be two areas where I'd look for. Sometimes when these trends develop, it's the pullbacks, the bigger pullbacks that suck a lot of people out, and then the true move happens as well. So my kind of aggressive area would be this 107.26 area to 108.26 area. So what I'd like, that'd be my first. If we can break through these lows, that would be my first area I'd be looking for shorts at. If that doesn't work out, my second area would be here. And if that doesn't work out, I'd be trying to buy longs up to that 10.99 area. Yeah. So I'd always want to get as high as possible to sell or as low as possible to buy. But again, one of a key thing I'd say, is a big lesson I learned is sometimes you think, can it ever get there? And it's a great question you ask. You think, man, it's never going to get there. I'm going to be waiting forever. Well, it might be a while, but it's amazing how many times you end up, getting a very aggressive on a trade, and then you see a really fantastic pullback, and then the true move actually happens. And I've found that typically, having that patience to wait for those big areas can be great. But, one of the little things I like to do in my own trade plan is have two areas. So this would be area 1. This is the aggressive area, 107.26. Area 2 would be the 109.4 area. That would be the more conservative area. But again, I'm going to be more inclined to take those areas if we break these lows here. You see, these are the lows I'm talking about. If we break these lows here at 104.61, that's what I want to see broken really. Because right now, I'm very limited on profit margin, getting too aggressively short on here. I mean, I was doing one of our live training rooms yesterday, and we got a real nice trade on the dollar. But again, profit potential was been and done on it. Because, you got to be aware of, look, last time the market was here, we did have a decent rally. We had a 1,000 pip rally from this area. 1,000 pips is nothing to be sniffed at. So, the way I approach my trading and the way we all approach our trading is very simple. I don't make a business out of trying to, say, hey, make an argument for will it break or will it not. I let the charts dictate to me. I let the charts tell me, and I say, hey, look, based on the charts, what am I seeing right now? And based on the charts, there are buyers, there have been buyers around this 105 area. Everybody gets very bearish on this thing. And how many times have you seen negative news and then out of the blue the market's done the complete opposite? I mean, it happens time and time again as well. So until this 104.6, 105 area breaks, I'm going to be cautious that we could get a bounce from here, especially considering that we've got the supply a little bit higher. I'm the kind of guy when I look at these markets, I don't care if it breaks lower. Oh, Sam, well, it did go lower after all. Well, I didn't say it wouldn't. But what I don't want to be is a seller right this area in this low area. Because if we sell too low down, the danger is that we get that initial push, the market springs back, cleans all those stops out, and then the true move happens. How many of you guys have seen that happen? When you've taken those breakout trades. I have a very strict rule on when I take a breakout trade, because you see so many times the initial thrust through a support area or through a resistance area, and then the market sweeps back, clears out all the stops, everybody gets done, and then the market goes without you. You see that a few times, okay? So I don't do that. I typically say, hey, you know what? If it ain't broken, then I'm not going to try and fix it. What I'm going to do is I'm going to wait. I'll lean on it with a real tight stop, and I might get the lows, or I'll know very quickly I'm wrong, let the thing break down, and I'm going to wait for it to take a pullback. And an area like this could be a pullback for us if that happens as well. So, I find that, it's a major mistake. A very dangerous, costly endeavor sometimes can be selling after everybody else has sold or buying after everybody else has bought. So, here at the school, we try to kind of get people thinking a little bit like the institutions on here. So these are kind of those key areas that I'd be looking for. So I'm going to put these on the right-hand side. Well, a rule on a breakout. Funny enough, I only will do it, Gino. Great question, by the way. I'm not a fan. I'll only do it if I've got a nice, clear, easy run, okay, or up or down to the next area. And also if the risk to reward is there. See, most people will tell you to turn around and say, hey, when you take a breakout, take a real tight stop. Because, with a breakout, if it's a true breakout, it's going to go, right? Okay? And, that can be true. But sometimes I've seen it, many times I've seen take the tight stop on that breakout, and then the thing ends up, coming back and pinging you. So I'm more inclined to still give it a decent amount of room, a good size technical stop. Heck, you know what? If I was to sell this low here, and let's just go back and look, I mean, we've got room to go down. I would expect it's not going to go in a straight line. We probably take a little bounce around 102.76 here as well. There's a little area right here that I'd be a bit cautious of too, around this 102 area. Let me just show you, put some numbers on there. So, I would say, hey, the profit margin is, the potential's there for it to go down, first target 102.460 and then all the way down to 99.68. So I'd give it a stop that justifies the particular reward. That's what I would do on here. But I tell you right now, I'd really want to see a clean break of that because, what I'm actually noticing right now is there was a little demand zone just looking at this chart right here. I mean, I'm going to be even more cautious about this, guys. There's a little pocket of demand sitting right there that's just got my attention. And if I scroll back and take a look at it, guys, I wouldn't be as surprised to see a bounce at this 10428 area to 10341. If we take those lows out and then retrace back up to supply and then come down. I only just noticed that while I've been looking at the chart. It's a very subtle area where some buyers, that's a perfect little trap, where a lot of people are probably going to get heavily short on this market as we break these lows, and there could be some buyers waiting there. I don't think this market's got a clear run to the downside. There's demand here, here, and down here. So while it all looks peachy, at the end of the day, yeah, I'd say I'd like to see us put in a new low, or at least, trade off of one of these lower demand areas. And then if we rally back up to supply, then expect to move to the downside. Now, you may be thinking, hey, Sam, but these are weekly levels you're showing me here. I'm a day trader. Well, guess what? Get these levels in your head, because if you're day trading and you're near these areas, one of your day trades could turn into a nice swing trade for you. So yeah, rules on a breakout for me are very simple. It's kind of like, if I've got a clean run up or down after the breakout to the next level of supply or demand, then I'm all good to go with it. And I'll risk, obviously, I'll put a risk on that justifies the potential reward. So if I've got a 4-to-1, if I've got a move of 200 pips below me, I can justify putting like a 60 pip risk on that. Does that make sense? Or if I've got a 400 pip move, it's all good. So it's a very aggressive style. In fact, as well, guys, I'm even more inclined to do it when I day trade futures, because, you're in it very quickly and you're really kind of just getting in and doing your action. Is it worth taking only retests and accepting when it doesn't retest, or not betting on retests? Another great question on there. Some days you can wait for the retest and it comes. Some days you wait for the retest and it never ever comes, It's, you got to look at what works for you. What's always worked for me the most is allowing the market to break and then waiting for the retest. That's always worked good for me. Sometimes I miss a trade, but I'm not worried about that, because, when I catch a good position trade on here, I'm happy to build the position and so on. And, I'm the kind of trader who I don't just limit myself to 3-to-1 trades. I'm the kind of guy I like to trade, 4-to-1s, 5-to-1s, 6-to-1s, because I'm a lot more patient and I wait for those bigger areas. So statistics that I've done on my own, I found it's been good waiting for those particular areas, as long as, obviously, especially if I've got a scenario where there's multiple demand levels below me or multiple supply levels above me. So in that respect, I found it's better to wait. But, as a day trader and so on, I think, the breakout trading can lend itself quite well if you can catch one of those decent moves and it follows through. But it really does depend on your style and how aggressive as a trader you are. But I think the more conservative approach is to always wait for the pullback. Okay? So, yeah. Yeah, absolutely. Yeah, clean break. It's got room to go. I'd want to see that, and as the stop justify the potential reward. I mean, I would never go any lower than a 3-to-1 on that. I really wouldn't. So, if I was going to risk, 50 pips, I'd want to see at least the 150 target on that. That's what I do. As long if the reward's there, fine. Just expect on a breakout trade, guys. One of the things I think to accept is that you're going to likely, on a breakout trade, you're going to likely get a retracement. It very rarely just you enter it and it goes. It typically always retraces back. So you get some profit, it comes back, and then it goes again. So do yourself a favor and don't sit there and cheer the trade on, all right? Sitting there trying to cheer it on is just a recipe for kind of disaster. One, it doesn't work, okay? And number two, you're going to get all these emotional questions. Oh, it's working, it's not working, it is working, it's not working. The less time I spend at the less time I spend at the charts, the better it seems to be. Time frames, all time frames work. It's whatever you're executing off. So, if I'm executing off of a 15-minute chart intraday, I'll take it off that. If I'm I trade a lot of daily levels in Forex, I'll take it off of a daily level. Rules apply the same. I'm just using different styles for different methods. That's all it really is. Okay? So, no problem at all. So we've had some bounces before, but just looking at the daily chart, you can see we're right down at the meat of this area again. And look, there's still buyers in this area. I just think you can do yourself a real easy favor when you're trading this euro dollar of just being aware of those round numbers, being aware of obviously, what's going on and what's happening on here. And again, you can see the supply levels are still being respected. So, there's just one other little thing I'll give you, a little tip I'd give you on here as well. Like I said, now is not the time for me to sell where we are. For more over the next coming few days, for me to even, I would be happy. This was a level we put on our XLT. So a lot of my students were short from 106.87 last night and took it down here to the 105.70. So it was an XLT trade that we had on our prep screen. Let me just pull it up, actually. Let me just find it for you. It was a recent one I had on here. I literally did an XLT last night, guys, with online trading accounts. This is my template from last night. So yeah, we had a supply level at 106.87 to 107.07. This was a level that we took last night. This time last night we put in and that triggered. It was only a 20 pip risk and it did a 120 pip drop because we were expecting a bounce at 105.85. So this was the area where we had. So we had our high today of 106.88. It only went a pip against us, and it's come down to our area here and closed out our shorts. It was just a short-term short that we got off of some of the smaller time frames on here. But you'll notice, one of the things that we were very keen to do on here because we were trading smaller time frames, and I'll just pull up a chart and show you. Once the data loads up, you just apologize for this while we're waiting for it. Okay. This was our area that we actually had on here last night, and you can see that we wanted to get out because our daily area, this was our profit target, so we were short from this area up here, and then the price came down. And again, the reason why we were keen on just only taking that as it worked out about a 5-to-1 trade on here, 6-to-1 trade was very, very simply we moved on this particular move. It's because of this daily area here coming in the way. So you can see we still haven't done any significant highs, but we're back down at the daily lows. So what I'd really like to see at least is, and I've got some students right now who are buying off of this daily area as we speak, saying, hey, I'm in it. I'm going to see what it does. I've got some students who are waiting for the highs to be taken out. So if we can get a new high put in and we can actually see one of these previous higher highs being taken out on the daily chart of the euro dollar, then I'd be more aggressively buying pullbacks. But again, I'd only be buying pullbacks aggressively back up into first target of around 107.60. Okay. This depends on obviously, this is if it flips the other side of it. And then the next area would be the 1.1. So, even if this market does have a retracement on it, I think, you've got to be really sensible with your profit targets. You've got to wait for it to at least take out this 107.50 area, then buy pullbacks. And then the first target around 108.6 is a second target around 1.1. So, that's what I'd be seeing for a short term. And then I'd be getting short again. What you'll notice I'm talking about is I like to try and capture as many areas of the trend and the retracements as possible, and this is something that that we work very hard on doing in the academy. So at this stage here, with the euro, I'm not massively bearish on it. I've got specific things that I'd be waiting for that we've just talked about, and I'm gonna have to remain bullish, while we're holding the 105 area. At an extreme, I'll just put that number back on for you. I've got to remain bullish until we really break this 103.40 area. So I'm going to just try and buy as low as I can and be sensible, taking my profits at any quality opposing supply areas and just playing that. And if we do develop a new trend on here, well, the great thing about it is if we can take out this weekly supply area, we should have an easier run up to 1.1 and then possibly a test back up to 1.13. But again, I'd need to at least see some of these previous daily highs taken out to do it. So if you buy low enough, you're going to have the room that if it fails to take out those highs, you're still going to be able to get a decent profit out of it. Okay? That's kind of what we're looking at with the Euro USD. So again, it's a challenging looking market right now, but so is the dollar index. So, they're kind of giving you the same. They're giving you the same kind of thing. Here's the pound. A pound has been tricky as well. Now, a pound again is also showing. I think to me the pound looks a little bit weaker. The pound looks a bit weaker than the euro. The euro's so heavily oversold. Whereas to me, the pound is kind of slowly drifting its way and having these little pops. But again, still respecting its supply levels, still failing to take out and make new significant daily highs. We have been respecting our demand zones. This area here was a demand level to the left. This zone here was a level I remember kind of sharing and talking about in one of my webinars that I did, I think one of the last webinars I did here on FX Street, where we were expecting a bounce. I haven't done a webinar for quite some time here, but this was an area that we were looking at for a bounce that produced a really nice move back up to supply at the 155 area. You can see now that this level has been taken out. So again, you see we did get a really nice move away from that area, but again failed to take out these previous highs. Again, you can see the weakness I'm talking about. Do you see how the price is just failing to really break above any of these areas of supply? Based on this, our next quality level of demand is much lower. If we continue this kind of fashion that we're in at the moment of just kind of drifting our way lower by lower by lower on here, one would expect that our next area that we could get to on the pound is going to be around 149.29 to around 148.57. That would be based on here, because again we're not really we're seeing a lot of weakness and we're seeing weekly levels being respected as well. So you can see this is kind of shifted now to these weekly levels of supply. So obviously now we've overshot. The problem I've got right now is I'm not really seeing any good quality entries on here for the pound. I can remove this off of the charts, these lines, and kind of obviously we've got a nice supply level way back up at 154. But what I'd like to be a bit more aggressive on here, I would really like to see if we could again, the 150 area is massive. I mean, 1.5 is huge on the pound. And you can see as we're getting near to it, we're bouncing. We're getting near to it, we're bouncing. But again, the thought on here is potentially, there is more downside based on the big picture charts available to us. A little bit of weakness in the market. It's just about waiting for a good entry. I'm going to level a sniff around at some of these areas on slightly smaller time frames and see what we can come up with. Again, some of the round numbers might be good for us. Let me take a look. I'd love to see this weekly area taken out first, but sometimes you've got to be aggressive on here. Again, we're late in the downward trend, which is always a concern. When you're a bit late in the downward trend, it's not pretty, but there you go. You can see again in here, like we had some supply in this area here, but because of our location, we're not following through as much as we like. We've got a lot of buyers. We're low down. We're approaching that 150 area. There's going to be a lot of institutions buying in that particular area. At the moment, I'm not really seeing a better quality entry that I like on here. This again, you've got to be smart with your profit takings. Any shorts that you do, you've got to remember you're coming back down into weekly and monthly lows, guys. So, one of your best options, again, is to let it take these lows out and form a new area where you could take a retracement to. I've not been seeing lately as many quality opportunities in these Forex markets, especially on the majors, purely because of obviously the way that the market's been, very indecisive, not a great area, not really a great level of opportunities. The pound's not been one of my most favorite things to trade, but I'm really, you could take a stab. I mean, I'm going to say it here now. This area here is your only area. It hasn't quite retraced back. I mean, but you're very limited on your profits. 51.35 to 51.58. I mean, it's not huge. It's only 23 pips wide. It's not a massive risk on here. I'd be very ruthlessly taking a first target at 50.70 here, a second target around 50.40, and then I'd be trying to trail the stop if it broke down. That's really the only play on there I'm seeing at the moment. But again, if we take that high out, if we can break through 51.50 on here, guys, you got to start being willing to buy pullbacks to ride this thing up a little bit higher to at least around the 152s area where, some more selling pressure could come in. So I don't think this is the cleanest market. Downside is on the potential, but again, I want to say this area that I'm looking at right now, it truly is this area here is a very aggressive area. Apart from that, I'm just not seeing as many quality areas as I would like. Let's take it to a slightly larger time frame for a second. And, sometimes what I'll do is I'll just bump the time frames up just to kind of make things a little bit clearer. Again, I mean, nothing's standing out to me. I mean, I love the supply up at 154, but it's a long way off. So, if it manages to, both of these round numbers are probably worth a shot here as well. And again, those two areas, I mean, definitely the more conservative area is going to be the higher one, the 51.83 to 51.99. Again, I'd have stops above 52 to be safe on that, and then look for this continuation to the downside off of there. This is it's like the euro, basically. You've got your aggressive area and you've got your slightly more conservative area, both of which are located in, nearer to these weekly highs, which is good. But again, ideally, I'd really like to see it break lower before I do that. So if any of these areas trigger, guys, be ruthless on your profit taking. Use these lows as a first target, because I'd hate to see you give all your profits back if it does take a bounce. Okay, that's what I'm kind of looking at on there right now. Okay, so I mean, sure. Location-wise, it's in a place where it could definitely bounce again as well, but I'm just not seeing anything great. If anything, the best place for a bounce, if you fancy trying to capture it, if it does double bottom, would be a buy down here, right down at these lows. Right down at these lows would be the place to be getting involved in it, down at 50.46 to 50.26, because some buyers seriously stepped in at that area, and again, that would be the place where we'd be looking to see if it double bottoms from there. Okay, so that's your pound that we're looking at right now. A break of that demand level, it's short selling all the way down, and again, a way down would be down to around, I would say, put that daily chart back up so you can see those numbers. I would say a good target on that would be 49.34. Okay, so again, I'm not going to be selling aggressively into this lower area. That's a place for a good particular bounce. It's not clean. A lot of these markets aren't too clean right now, and it's making it pretty challenging. Okay, let's just quickly look at the gold market for a second as well. I don't know if you guys do trade a little bit of spot gold on here. This is actually the gold futures I'm looking at. Very simple. My analysis on gold is, it's all about the $1,000 mark on here. There was interesting this summer in July. There was a statement from Goldman Sachs when the market was down here. When the market was down here about 1080. Goldman Sachs, one of their top analysts, said he saw gold going to breaking $1,000, and then the market rallied. Typically, Goldman Sachs say one thing, the market does the other. We find that a lot with these big guys, and now the market's back down here again. I see it all the time. I guess it was because he wanted to scare everybody into selling gold nice and cheap because he wanted to buy it, right? The report was on Market Watch. I think it was on like the 27th of July or something like that. I pulled the piece off. Do you know what I mean? I've got it somewhere on I think it was on here. Let me find it for you. Let me show it for you, actually. You'll probably like this. Let me find it. I've got it on. Here it goes. Here it is. I got it saved. Look. Goldman's Curry expects gold to fall under $1,000. There you go. Look, July 22nd. Yeah. So then, you look at our charts. Here was July 22nd right here. And you can see basically where the market had been in July. And look what it did. It rallied. So it's like, well, thanks, dude. Maybe you just wanted to scare everybody into selling gold because you wanted to buy it nice and cheap to ride it back up to then sell it a bit higher for its push to $1,000. I mean, that's why I don't read any of the news, basically, guys. So I take these clippings to show my students, to tell them to not look at this stuff. But let's see where we're at. Let's see where we're at. Um, Big level on the weekly charts that we're hovering around on, already drawn on the charts. This was a previous level that I had marked off with you, around 1.2. Got to respect some of the demand here. This is just, listen, for me, this is a great area on gold for a long-term position down here, this $1,000 area. I'll put some numbers on here for you. Without a shadow of doubt, we know we have been in a consistent downward trend on gold for quite a while, but it does love to make some wild swings. And the last push it just had, guys, to me, it's ripe based on the charts for a nice retracement if it can catch some buyers in one of these zones. If we could dip a little bit lower into here, around this kind of 1,040, I'd snap that thing up with a tight stop around 1,040, with a first target at around 1095, a second target around 1130, and then a final target around 1170. Yeah, just if we can come a bit deeper into this area, because this is where that last massive trend kicked off. So I'm kind of really spying on that particular area there. A little bit lower, $1,000, obviously, that could come into play. So, but that region is between 1,006 and 981. So again, a good little tactic that you could use on this area of demand down here is to try and find some smaller time frame levels within this lower area, because I feel that's going to be a really good. That's going to be a really nice. That's going to be a really nice area as well. Yeah, I mean, if it gets there, that would be real good. So. I see, you got the 106. You say pending sell at 106. So, to take the break down lower? To take a break lower if it breaks those lows, you mean, Pan? Yeah? So, yeah, there you go. So, the breakout style of things. So, okay, cool. So, I mean, I think that it could come down a little bit lower based on here. We're not quite in this area as we speak on here. I just, again, remember what we talked about on those breakout trades. Just make sure that, that you've got the room to go on it. The nice thing about gold is, let's look at it on a daily chart and see. The nice thing about gold is, when it breaks, it does tend to typically break on here. So, you could be good. So, you're probably going to be all right. I would say, based on the charts, this does have the room to get down to about 104.1, but I would seriously be very cautious about selling too aggressively into here, because there's some demand down in that area, absolutely. Okay, but a bit deeper into this area is what I would see, and then I gave you those areas where I think it could rally from there. The longer term buy is going to be the $1,000. I mean that's really it with gold. I mean that's the long term one. Gold is kind of like oil, it's heavily sold off. We're going to see what happens on here. I'm not expecting a ton of things to really happen between now and Christmas. I think next year will be kind of a little bit more of an open book with all of this stuff. But gold, just be cautious about a covering rally on that thing, especially from about that 1,050, 1,040 area. It wouldn't surprise me to see a little bit of a bounce. So any breakout trades you're taking, just be smart with those ones on there, okay, for you guys. Just be smart with it, and make sure that any profits that you do make, you protect them and don't get yourself hurt. I know you guys are using stop losses, or at least I hope you are. So if you're using the stop losses, that's what they're going to take care of as well. But I mean, this is the thing, guys. This is, we were talking about retracements earlier on the euro, right? We already had a good sell-off going on gold, right? And look, having the patience to wait for this pullback to this nice supply area on the weekly charts, did it pay off? This is exactly what we were talking about right now. Just let it can pay off. It can pay off having patience. Patience pays in the markets, guys. And one of the reasons why institutions do so well in this business is because they're getting paid to wait anyway. They got their salaries. Us traders who do this for ourselves, we have a different set of challenges, because at the end of the day, we want to make money and we want to get involved in this thing. So, but you have to trade like the institutions. You have to model those guys, and this is what we obviously teach at Online Trading Academy as well. A question from Gino, if I may ask, on breakouts and retests: do you enter on a touch when retesting, or wait for a confirmation candle? I only enter off of the supply and demand zones that I draw, so I literally take it as it gets to the supply zone. So I like to have a pending order, and I don't wait for any kind of confirmation, Gino. So, once it breaks and I've got my level that I want to take a trade to, when it pulls back to it, my level, my order's in at that level, and it's done. Everything I do is just it's in, it's done, and I don't want to miss out on it just in case. So. No confirmation for me. Once I got my price, my order goes in and my stop's set, and off we go. Okay. All right. Well, listen, guys. I like to kind of, when I do these things, just kind of give you a little bit of an insight for the way we look at the markets in Online Trading Academy and so on. No doubt I'll be doing another webinar in December, to wrap up the kind of new year, maybe kind of a little lesson webinar on the supply demand zones, and just kind of a little recap on what the novice mistakes are. I'm sure I'll talk to FX Street, and they'll give me a date, and I'll join you guys back in here for another webinar next month as well. But listen, if I haven't already said it, any of you guys stateside, have a fantastic Thanksgiving. I wish you all well and lots of good times with the family and everything. Just take it real easy over the next couple of days. There's not going to be a whole lot of activity, I doubt, in the markets as well, and keep things safe going into the Santa season, And I'll be looking forward to doing a webinar with you at some point in December to get us prepped for the new year. So I hope you found some of that outlook useful and so on. I don't really feel that the currency markets are really that fantastic right now, but make what you can of them. Maybe in the next session I do, we'll look at some of the cross pairs, because I think a lot of the good opportunities also been with the cross pairs, but a lot of traders are very keen on looking at the majors, so that's how it goes. Thanks a lot for all your attention, guys. Have a great day. Enjoy the rest of it, whatever you're doing. And FX Street, as always, thanks a lot for having me. Be well, trade safe, and take it easy. Thanks very much. Goodbye.